There are only two indicators that I use every single day. They are unbelievably simple, extremely reliable, and they make me over $30,000 per month. After 8 years of trading, these two indicators are the reason I became consistently profitable. In this video, I'm going to show you how to set up the indicators, my exact trading strategy, the rules I use with these indicators, and then I'm going to show you live real trades so you can see the executions with live market data. But I don't want you to take my word for it. My students have also used these exact two indicators to become consistently profitable and funded. So with that being said, let's dive into the video. Okay, so this is indicator number 1. But what I want you to understand is that indicators on their own are absolutely useless. And I want you to know that indicators need to be used in confluence to naked price action in order to actually build a profitable, proven, simple system. So yes, indicators can be very helpful, but you're never going to be solely using an indicator to actually make a trading decision. So I want you to note that the two indicators that I'm going to show you in this video, they need to be combined with naked price action. And I'm going to get onto that further on in the video so I can show you how we can piece this together into a framework and a proven, simple system. So the first thing I want you to do is head over to the indicators tab at the top of your screen. And what most people do is they start scrolling. So they scroll down, maybe they look at the awesome oscillator, or they keep going down at the Chaikin money flow, and they keep scrolling the Chopok curve, right? And these names are absolutely outrageous. And so the first thing is, like, if you're looking for a holy grail indicator, or you're looking for a strategy or a holy grail strategy, the first thing I need to tell you is that that does not exist. There's no such thing as a holy grail indicator. There's no such thing as an indicator that is just going to, instantly make you profitable. It's not possible. So if you are looking for a holy grail indicator, click off this video right now. This is not the video for you. So the first simple indicator is the EMA 20, 50, 100, and 200. And the one that I've used for years is this indicator right here by Dr. Sweet. So if you click this indicator, that will apply it to your chart. Then if you click the X in the top right of your screen, and I next want you to navigate over to the top left of your screen, double click the indicator. And so what you have right here is the 20 exponential moving average. You have the 50 EMA, this is in green, the 100 EMA in blue, and the 200 EMA in red. What I want you to first do is to uncheck the 20. So you don't need this one. We're not going to be using this on. We're only using the 50, 100, and 200. Then click OK, apply that to your chart. Okay, so what is the exponential moving average? So let's say right now that this is the 50 exponential moving average. So all that an exponential moving average is it's plotting the average of the last 50 candles. So if you're trading a daily time frame, that's going to be the last 50 daily candles. If you're trading a 15-minute time frame, it's going to be the average of the last 50 15-minute candles. But where the exponential moving average is better than the moving average is that the weighting of the average is more skewed towards the start, towards more recent price data. So the exponential moving average is more sensitive to recent price movements or price data, which is vital because as a trader, the most recent price action is actually the most important price action. Okay, so how do we use this indicator? So what you're going to be looking for, right? We have a 50 EMA. Let's say that this is a 100 EMA. And let's say that this right here is a 200 EMA. So what we use this for is a trend following filter. We use the EMAs to understand whether we are bullish, whether we have a long bias, a sell bias, or whether we have no bias in the market. So for example, when the 50 EMA is greater in price than the 100, which is greater in price than the 200, this indicates to you as a trader that you have a long daily directional bias. You have a long bias in the market. So, let's say that you're trading an intraday time frame. Maybe you're trading on the 15-minute time frame. Your intraday bias would be long bias. If you're trading the daily time frame, your bias would be long bias. A couple things to note here is we don't care about the gradient of the EMAs, right? Sometimes you see people, maybe this is the EMA right here, and they're looking at the angle of the EMAs. So we don't care about the angle of the EMAs. We don't care if they're heavily sloping to the upside, whether they're flattening out. All that we care about is, are the EMAs in order, right? The 50, 100, and 200. That's going to give you your bias for the day. Another thing to note is we don't care about the distance between the exponential moving average. Again, because these things are very subjective. Like, how do you quantify the distance? How do you measure the angle in real time? These are things that are going to create a lot of subjectivity in your trading. And the goal needs to be to keep things as simple as humanly possible. So that was an example of a long bias market. Vice versa, if we have the 50 on the bottom, so let's say this is the 50 EMA, we have 100 in the middle, 200 on the top, this would indicate to you as a trader that you have a sell bias market, right? We don't care about the angle. We don't care about the distance. If they are in order, then you're only going to be looking for shorting opportunities. But where this goes out the window, this is where so many traders go wrong, is, let's say that this is the 50. Let's say this is the 100. And then the EMAs cross over. So the 50 starts pushing higher, crosses over the 100. Let's say the 200 EMA is all the way up here. Well, this would indicate to you as a trader that you have a no bias market. So this would be a day where you're going to be sitting on your hands. This is maybe, a session that you're going to be sat on your hands. You're not going to be trading. And then it's up to you as a trader to be accountable to that. So as you guys know, I like to keep my trading very rules-based, very mechanical, and very simple. So this is the sort of framework that I like to adopt. So if the 50 is greater in price than the 100, which is greater in price than the 200, then you've got a long bias market. If the 50 is less than the 100, less than 200, you've got a sell bias market. And if you do not have the order above, right, i.e. the EMAs are not in order, then you have a no bias market. And so you're going to be sitting on your hands, you're going to be waiting patiently, and you're not going to be executing. So let's look at some literal live examples from yesterday in the market. So right here, we're looking at gold on the 15-minute time frame. So if you're intraday trading, this is a very good time frame to be looking at. But these principles, they can be applied to all time frames, all assets, in order to first work out your directional bias. So right here, you can see the 50 EMA is greater than the 100, which is greater than the 200. So this indicates to you as a trader that you have a long bias market. And so your goal would be to look for pullbacks in the market, and then you can look at naked price action and your entry models, which I'm going to get onto in a moment. And then your job is to take part in these trend continuation plays. And you can see that these trends continue for some time. And I see a lot of traders using very subjective ways, right? They're using daily order blocks, daily fair value gaps. Maybe they're using 4-hour market structure. And I'm not saying that none of this works, but it's very subjective because, which order block do you take? Which fair value gap do you trade from? Which point of interest do you trade from? So looking at the market from that sort of perspective makes it very subjective, makes it very confusing. And remember, the goal here is to keep things as simple as humanly possible. So if we just scroll back over here, right? This is an example of a sell bias market, right? You can see the 50 in green is less than the 100 EMA, which is less than the 200. So sell bias market, you're only going to be looking for shorting opportunities. And then your job as a trader is to use a proven system in order to enter to then take advantage of these trend continuation plays. If you look very closely over here, you can see the EMAs got very close together. They sort of flattened out, but then they crossed over, right? They crossed over right here. So you've gone from a bullish market, a long bias market, to a no bias market. As soon as the EMAs cross over, you have no bias. And you can see, you avoided these choppy market conditions, right? Because this right here would have been a time where you're going to be sitting on your hands, you're going to be waiting. And you knew that it was going to be choppy based on the exponential moving averages crossing over. But where traders go wrong is they don't be accountable to that. They know and they expect choppy market conditions based on exponential moving averages, but then they get emotional, they get greedy. The market gets boring. And then they start hunting for trades or hunting for setups. When in reality, this was just a no trading day. This was just a day where you're going to be sat on your hands. And then you can see the EMAs then got back in order right here, back into a long bias market. And then we got a very aggressive continuation higher. Okay, so indicator number 1 is great. It's going to start to help you to become profitable. But if you want to become consistently profitable, then you need to understand indicator number 2. So we've started off with like the absolute basics, and now we're going to get more and more advanced. So indicator number 2 is an absolute game changer. It will make you more profitable. It will help you time the market correctly. And it took me literally 5 years of failure in trading in order to actually understand this indicator and how to use it properly. So next, I want you to head over to the indicators tab at the top of your screen. And then I want you to type in trading sessions-sonar lab. So it's this indicator right here by Future Trading. So if you click this, add it to your chart, and then click the X in the top right of your screen. But this is where it gets more technical. So I want you to go to the top left of your screen, double click the Sonar Lab session indicator, and then I need you to literally just follow these settings. You just need to literally do as I say. So the first thing is time zone. So click this box and set this to GMT. Set your Asia session from 11 p.m. until 4 a.m. So that's 2300 until 0400. Scroll down. Next you have London session. Set this from 8 a.m. until 10 a.m. Continue scrolling down. You have New York session. Set this from 1 p.m. 15:15. If you want to make this indicator more clean as well, you can uncheck these boxes. So you have the kill zones, right? You can uncheck the labels. So uncheck Asia, London open, London close, etc. Click OK, and then you're left with the perfect session timings. So as you can see, we have 3 different color boxes on our screen, right? We have Asia session in red, we have London kill zone in blue, and we have New York kill zone in green. If you navigate to the bottom right of your screen, you can see we have set to New York timing. So this is set to UTC, but you can set it to whatever time zone you want. And then if we just check the indicator, right? If you hover over, you have the Asia session. If you look at the bottom of the screen right now, you can see this is Monday, 5th of January. And Asia session should run from 6 p.m. Eastern, that's New York time, until 11 p.m. Eastern. We have the London kill zone. This should run from 3 a.m. until 5 a.m. And we have the New York kill zone between 8 a.m. and 10:30 a.m. Eastern. So now I'm going to show you how to use the Sonar Lab session indicator. So I want you to focus very, very closely. So we will only be taking trades in London. This is between 3 and 5 a.m. Eastern. And we're only going to be taking trades and executing trades in New York between 8 and 10:30 a.m. Eastern. So we're not going to be taking any trades outside of these windows. And this will prevent you from over trading, revenge trading, and it's going to give you that structure to your day. So the way that we use these indicators in combination, right? Let's assume that we have an uptrending market. So how we defined that before was we have a 50 EMA greater than 100, greater than 200. So therefore we would have a long bias market. So when you know that you have a long bias market, you're then going to use indicator number 2 to plot the previous session's highs and lows. So for example, let's say that we've had this pullback in price. So this right here could be the Asia session low, right? This could be the Asia session high. So then what you're going to be waiting for is you're going to wait for one of these kill zones, right? You're going to be waiting for either London kill zone or New York kill zone. And you're going to wait. You're going to wait for price to come down. If you're long bias, right, you need to see price take out the Asia or London session low. Because what we have below the Asia low is something called sell side liquidity. And what that means very simply is that there's a lot of money resting below the Asia session low. So this is in the form of sell stops, and this is in the form of stop losses. So what's going to happen when price gets down here and price liquidates below, right? We get a liquidity sweep below the Asia low. This is going to do 2 things. Number 1, this is going to stop out early buyers from the Asia session, right? Imagine that you bought in Asia. Your stop loss is going to be below the Asia session low. What this is also going to do is induce breakout traders into this market, thinking that this is a breakout to the downside. And therefore, It's these two things that will be providing sell-side liquidity into the market. But remember, we are long bias on this market. So a lot of traders are short. A lot of traders are on the wrong side of the market. And then once we've seen that, it's our job as a trader to look for an entry model that is proven in order to get long in this market with the overall trend, right? Remember before how we plotted the EMAs indicating a bullish market, because it's this taking out of sell-side liquidity that provides the bigger players and institutions to position into this market. And then it's our job as a trader to trade in line with that. So this could be the Asia low. And then what you're going to be looking for is, okay, during a kill zone, if you can get a confirmation, either during London or during New York, and we're going to get onto live trade examples in just a moment. And so if you get your confirmation during a kill zone, you can get long and look at targeting higher prices. So this is in general how we use the Sonar Lab session indicator. We use it to plot previous sessions highs and lows in a very rules-based way. We also use it to know when we are going to be trading in the market. So now let's look at a live trade example and tie everything together. So let's be honest, everything that I've taught you so far is pretty much useless unless you know how to enter with a rules-based system. So now we're going to break down some live trade examples. So first things first, as always, we're looking, what's the bias, right? What are we looking for on the day? And I want to be very clear, like I trade a one time frame strategy. So all of my analysis, my execution, my directional bias, everything is on the 15-minute time frame. And I want to break down a trade that I took live with all of my students. So first things first, 50 EMA, greater than 100, greater than 200. This indicates to you as a trader that we have a long bias market. So that means that you're not going to be going counter trend. You're not going to be trying to short this market. You're not trying to fight the momentum because you just make so much more money. Like I just can never understand when traders are trying to go counter trend. You just make so much more money when you're trading with the trend, with the flow of momentum. So because we're long bias in the market, we need to go ahead and mark on sell side liquidity. Well, we have the Asia low, right? So we know that we have sell side liquidity resting below here. So we're waiting for price to take this out. A very common question that I always get asked is, can the liquidity sweep occur before the session? And it absolutely can. So it's very important and it's vital to note that your liquidity sweep can occur before the kill zone, but the confirmation needs to occur during the kill zone. So right here we have the London Open. We come down, we take out sell side liquidity, and then we need to wait for our entry model. So all that I'm waiting for is literally a 15-minute bullish confirm, and this has to occur during a kill zone. So that is exactly what we get right here. So this closed at 4 a.m. Eastern. So this is a 15-minute bullish confirm. We have the high of the confirm right here. So we don't enter on the closure, but we enter on the break of the high. You can do this by a simple market execution, or maybe you have a full-time job. Maybe you're in full-time education. And so what you could do in that instance is literally set a buy stop above this high. Then you can go about your day. You can check back in maybe 15, 20 minutes time. And therefore that would give you the freedom. Then what I recommend to do is your stop loss always goes below the liquidity sweep low. And then I like to add a small buffer, 0.5 points below the low. So this is when you're trading US 500 or you're trading ES, right? You want to have a buffer below the low. And that's just to give the trade room to breathe. And then what I recommend to do is to target a fixed mechanical, repeatable 1 to 2 risk to reward. So you're not looking for a home run in this market. You're just looking at taking a small, repeatable, bite-sized piece out of the market over and over again. So I was tagged long in this trade right here. And then it's just a case of setting and forgetting. So you need to ensure that you contain your risk to the downside. So you need to know exactly how much you're risking. So if this trade does, unfortunately not work out, then how much are you going to lose? use? How much are you risking on this position? And so you contain your downside and then you allow for the expansion to the upside. So you just allow the trades to play out. You don't micromanage, you don't interfere, you set and forget your trade. So as you can see, we got, price was pretty much going sideways right here. We got a push into profit. We then got a drawdown sort of around back to entry. And then what we got was the NYSE open volume coming in. So this is the open volume, and this is at 9:30 a.m. Eastern. That's New York time. And this is where the volume came in right here. And this trade did hit take profit for a 1 to 2 risk to reward. And this trade was taking live with all of my exclusive students, with my exact entries, stop losses, and take profits. And this was done in a live trading session. So as you can see, there was literally students that took thousands of dollars of payouts from this trade right here. They got funded over $100,000. They took payouts of $2,000 to $3,000, and that's what we're doing inside the exclusive community. Okay, so vice versa, we've just looked at a buying opportunity. Let's have a look at a shorting opportunity. So we're looking at the US 500 and we're looking at the 15-minute time frame. So as always, the first thing that I need to understand using indicator number 1 is, okay, what is my directional bias? What is my bias for the day? And you can see 50 less than the 100, less than the 200, sell bias market, meaning that you're only going to be looking for shorting opportunities. Once we've done that, it's then our job to identify in a rules-based way, where is the buy side liquidity resting? So remember, when you're looking for shorting opportunities, you need to identify buy side liquidity. And a lot of people do this in very subjective ways, right? Maybe they use swing highs and swing lows. Again, how do you quantify that? When you're using sessions, it's very mechanical. It's very rules-based. It's not about how I feel or my emotions. It's like, this is the high. And so we have Asia high, we have buy side liquidity above here, and we have London high. We also have buy side liquidity above here. So as a trader, unless we take out London buy side or Asia buy side, you have no work to do. And that's the beauty of this system and how it only requires around 15 to 20 minutes of chart time each day. Because a lot of the time, you set your alerts. You go, you navigate to the London high, you click this plus icon right here, and you set an alert. You can do the same for the Asia session. And then when your alerts go off, you can then monitor more closely. So you're not having to be glued to the charts. You're not having to be staring at the markets all of the time. So the way that I trade is very sort of hands off. Yes, some days are busier than others. Sometimes you have a no trading day. Sometimes you have 2-3 trades in a day. And that's the reality of trading. And so we're waiting. We're waiting for London buy side to be taken out so we can think about getting short in this market. So this is a trade where we're trading the New York session, okay? So remember, we've took out London buy side liquidity. We now need to wait for a confirmation during New York kill zone between 8 and 10:30 a.m. Eastern. So we're waiting. We're waiting for that bearish confirm. So we're waiting, and we haven't got that so far, right? All that we've had is literally a continuation to the upside. And we've now had what I call an extreme liquidation. So we've took out Asia high buy side liquidity, and we've took out London high buy side liquidity. And so remember, we're still sell bias, right? We don't care about the EMAs curling over. We don't care about the distance between them. We don't care about the gradients of the EMAs. We're during a New York kill zone. We expect volume to come into the market, and we expect lower prices. So if I zoom in over here, we get our 15-minute bearish confirm, and this was during a New York kill zone. So in order to enter a shorting position, you can head over to the left side of your screen, and there is the projection tool, and it's this short position right here. In terms of entering short, we don't enter on the closure, but we enter on the break of the confirmation candle low. Stop loss goes above the liquidity sweep high, and make sure to account for spread, right? Make sure to account for a buffer to give this trade plenty of room to breathe. So I was tagged short in this trade right here. And then again, it's just a case of targeting a fixed mechanical 1 to 2 risk to reward. You're not looking for a home run. You're just looking to take that small piece out of the market that is reliable, that is simple, that is quantifiable. And we're now past the NYSE Open, the New York Stock Exchange Open. And so again, we expect volume to come into the market. And that is exactly what we get right here. So we get the open and we get a huge amount of volatility and volume coming into the market. And that's why we're trading these high volume kill zones, right? The New York kill zone and the London kill zone, because we expect that volatility. We expect that volume to be coming into the market. And this was another trade that I took on a live stream with all of my exclusive students. And within 30 minutes, this trade had smashed take profit. So these are the exact two indicators that my exclusive community used in order to become consistently profitable and funded. What I'm sharing with you is literally just the tip of the iceberg to what I am considering when I'm executing this strategy. You may want to consider how to filter for A+ setups. These are the exact strategies that the private side of my community focus on to become consistently profitable. So take Farah here, for example. He's now funded over $100,000 with FTMO, and he's just took his third payout of over $2,950. So shout out to Farah if you're watching this. Let's take another one from literally just this morning. So another shout out to Gav, another one of my one-on-one students, and he's just received his first payout from FTMO. And this again was for over $2,000. And there's hundreds of other students in here that are also consistently profitable, following and trading the exact processes and systems that I teach. Here's another one from Marek, over $2,800. And let's just take this one step further. $14,000 for Andrew, $2,700 for Mantas, $6,000 for Kevin, $3,000 for Gabriel, and these are all in the last 90 days. And so if you're very serious and you want to take your trading to the next level, where I hold your hand every step of the way, where I do live trading, live Q&A, I share my exact executions, my exact entries, exits, stop losses, take profits, to help you become consistently profitable, then make sure to check out my exclusive community or my one-on-one mentorship. The link is in the description down below. I also recommend checking out another strategy video. So for that, I'll leave a link to that in the top right-hand side of the screen. As always, thank you so much for your time and support, and you take care. Bye-bye.